Alright, what's up guys? Welcome to this week's breakdown on how my weekly trade has been. So I always love to make these videos and I keep them raw, I don't edit them. That just for those real ones, those if you know, you know. So yeah, so this week I took a trade on USD, Euro USD, and right about now we are the daily time frame, as there's nothing much to see on the weekly time frame. So over here we have these areas of interest. We have the daily area of interest and we also have the weekly area of interest. So I'll just jump over to the H4 real quick. Okay, so I'll just jump over to the 4-hour time frame. So as you can easily tell here, the 4-hour time frame, I love to draw the areas of interest or the key levels or the zones or demand and supply zones, different names, same meanings. So I love to draw those areas of interest on the weekly time frame, the daily time frame, and the H4. Anything below that, I just use a mere line just to identify that area of interest. I love to keep my charts so organized, and that's why I label my areas of interest, as you have seen. So over here on the H4, you can see that the market's way bullish initially, and then the moment we broke the higher low, so this is higher low, higher high, and I could say okay, this is also the higher low, and then this is the higher high. So the markets broke the higher low, forming a lower low and a lower high. So obviously I won't go so much into the details, but now this makes the markets from bullish to bearish on the H4. And if I'm to zoom in a little bit, you can see that the markets were bullish after that, and we had some bit of consolidation over here. But obviously if you break it down even further, you can always find a trade in those consolidating markets, provided the consolidation is on a slightly bigger time frame like the daily or the H4. So jumping to the H2 time frame, you can see that we had the head and shoulders pattern form over here. So if I'm to pull out this tool here, I normally love to use just to mark it out for you guys. Okay, so we have the left shoulder, we have the head, and the right shoulder over there. Not a perfect one, but you get the idea. So we did have the head and shoulders pattern here, and in trading, the head and shoulders pattern is one of those really good reversal indicators. I use it almost in my trading. I use it every day. It rarely disappoints me. It doesn't have assured results. Of course, in trading nothing is certain. You can be right or wrong. So I'm not telling you that the head and shoulders pattern will always give you 100% win rate. No, just that when you use it, it really increases your chances of getting that trade right. So same thing happened here. We had the head and shoulders pattern. So when the week opened up on Monday, so obviously this all wasn't here. So on Monday the week opened up when we only had this basically. If I'm to move the cursor here, you see that. So yep, so this is how the week opened up on Monday at this exact candlestick. All right, so let's focus a bit there. So you see that we had a doji candlestick right here. So now that represents indecision in the market. So the market doesn't really know where it wanna go. When we have a doji candlestick, I have a friend that calls it the cross. It means the market isn't sure where it wanna go. You understand what I'm trying to say? But then this doji candlestick also happens to be bearish. So now we want to sell this market, and this doji candlestick is bearish. So that's a good sign, even when it means indecision. But it being bearish yet wanna sell this market is even a plus. And then after that, we had an engulfing candlestick, and it so happened around the same time at the area of interest, and we had this engulfing bearish candlestick, which is a very good confluence, and it also happened to be below the weekly area of interest. I've also made an in-depth video talking about my two favorite indicators that I always use in almost every single trade. You can go check them out. And if I'm to check here on my journal, you can see that the trade quality, that the total trade confluence score was 100%, and the trade quality was very strong. So this indicates that this was a very good trade to take, and putting all that into consideration, I took this trade and I placed my stop loss above the closest break of structure. So the moment it hits my stop loss, we shall have gotten a break of structure, which indicates reversal. And again, go into details. You can check on my channel for a detailed video on my strategy. I'm just taking you through on how this trading week has been. So, and I also placed my stop loss at the earliest or closest area of interest, as you can easily see. So this was a very perfect trade. It played out so well, and it was a win. So I didn't only take this trade this week, but I also took one more trade on CAD JPY. Okay, and now this trade, of course, I did take a loss, but overall it was a profitable week, because in trading your wins are always bigger than your losses. So zooming out a little bit, I'll go over to the daily time frame. So why did I take this trade? So here's the thing. Okay, I'll start from the weekly time frame. I'll have to start from the weekly time frame, then I break down the markets. Okay, you'll excuse me a bit, because recording while trying to hold the tripod, so quite not easy. So over here you see that this market is bullish, obviously bullish, and we have been bullish for a very long time, because we are the weekly time frame. So we have been bullish for a very long time.